Good morning, everyone. Welcome to the Big Tech Weekly Breakdown Show, where I break down every Sunday for your big tech stocks: NVDA, Tesla, Google, Microsoft, Amazon, and Apple. So if you feel like you wanted to just skip to your ticker, feel free to just skip to your ticker, and I will put those bars down there that shows which ticker starts at which time. And I also did a QQQ market breakdown video on Friday. So if you just wanted to look at the market overall on QQQ and SPY and direction of the market itself, I should check that one out on Friday. And let's get into it. So right now we're looking at NVIDIA on the daily time frame. So we are still looking at this rising wedge. We've been looking at this rising wedge for the past month and a half. And you can see this resistance and this support. And on Friday, we did break out of it bearish, but we ended up closing within the pattern. So that is valid. Pattern is still valid, and we are still within the pattern. What I want to see is a daily candle close outside of the pattern for it to be an actual break. And so right now, the levels I will be looking at if I was a bear is definitely this 279 level right here. You can see we have acted as resistance prior 1, 2, 3, 4, 5, and now we are above it. So when we're above it, it will act as support. So if I'm a bear, I would definitely want to see this level break, and if that breaks, then we're likely gonna be next level for me. Be looking at this lower range of this consolidation, which is roughly around like 263, 260 area. Due to the amount of volume traded in this area, what I want to see is the bear is able to break it, then that would be a definite win for the Bears due to it'll be potential weekly head and shoulders forming if that area does break. As you can see right now, we're still in a weekly uptrend. And if that happens, then head and shoulders will look like this. So this is the left shoulder, and this is the head, and then we would form a right shoulder. That would go from a weekly uptrend into a weekly downtrend if that confirms the break of that sideways range. If you are a bull, you want to see us, let's say we break out of this rising wedge bearish and it lacks follow through, which is what characteristics of NVIDIA has been in the past 5 months, where all the bear follow throughs are lacking. And we come down to here, 290, 278 again, 79-ish, and then we bounce off of it due to lack of bear follow through. And then we retest this area, pull back a little bit, boom, bounce off, and then we're heading to the 300. Next level of resistance for me would be 300 for NVIDIA if we do get a bull break. And if that happens, QQQ is definitely hitting new highs, as well as NASDAQ. So check that Friday's stock market video out if you are looking at QQQ. And if QQQ doesn't make new highs, I don't really see NVIDIA hitting 300s due to it being also a tech stock. So it will be a wait for NVIDIA to be able to negate that much headwinds from QQQ, given how much it's already ran up. If we were to like back down here and you were saying QQQ doesn't need to go up that much while NVIDIA still goes up, then I would agree with you. But after such a significant run from the bottom to the top for NVIDIA, 166%, you can look on the monthly chart and say, we haven't had a monthly consolidation yet at all. Due to the straight shot up, we need to have one monthly candle close below its prior month's low. So that would be 270. Well, May is not over yet, but let's say if we close below April's low, which is 262.2, and that would mean the monthly consolidation is on its way, meaning and then it could potentially continue. There's no doesn't mean it looks just like this one, straight shot up. This candle, see this red candle right here, closes below the we went below the prior low. That's a monthly consolidation, and then a continuation of the monthly uptrend. And I'm not saying that's going to happen right here where it continues, but we need to get some form of monthly consolidation happening. And it could just be a little bit of a break below the prior candle, or it could be a big one. Nobody knows, but consolidation is definitely on its way for NVIDIA. Let's go back to the daily chart. Yeah, so that's what I'm looking for both bear and bull case, support and resistance as well. And we'll see how Monday opens and go from there. All right, let's take a look at Tesla. So Tesla on Friday was actually extremely weak. So this is a daily chart. You can notice that we actually broke above yesterday's Thursday's high. This little 3-day sideways cluster range, we got above it, and the moment market opened, it was just straight selling. That's what I remember. Let's see, go to the 15-minute chart. Yep, you can see this gap up, and once market opened, there was just all sellers. This gap up was the news from Elon saying that there's going to be a new CEO for Twitter. And back when there was bearish sentiments of saying Elon is not in charge, his attention is not focusing on Tesla, isn't focusing on Twitter. So there was it was a lot of bearish news on it during this big drop here with all that Twitter drama. So when Elon announced there was going to be a CEO for Twitter, and bulls took that as bullish, and it gapped up. But the problem is QQQ was only down 0.36%, and Tesla is down 2.3, which is a lot weaker than QQQ. And even this bounce at the end of the day, QQQ retraced roughly to this area. QQQ roughly retraced to like around this range, and Tesla barely even bounced. This is still a bear flag, 15-minute bear flag. At the moment, due to the size of the retracement, it's not even at the 0.382 range, so it's still a bear flag. It's probably an hourly bear flag as well. Yeah, it's still an hourly bear flag. Almost confirmed it, and after hours, pretty much confirmed it after hours because it broke below this flag pole's low. But yeah, so Tesla is extremely weak at the moment. The thing I don't like the most is how we actually broke above this prior sideways high, and then we came back into it with absolute zero follow through from the bulls. So the next level I'm looking at, if we do break below this triple bottom, where we held 3 days sideways, and if we break below that, then we are not looking good at all. We will be likely heading back down to the bottom of this wedge, to be around this level, these levels here. And the next level here would be 160 that I'm looking at to see if the bulls can hold that, if we do break below that. And if the QQ decides to roll over and Tesla is already relatively weak, then there's a good chance that this gap's going to fill over here. We don't know that yet, how QQQs and the whole market, broader market, is going to trade. And the bull case for this is, let me even see the weekly chart here. We're in a weekly downtrend. So we're in a weekly, daily downtrend at the moment. And this looks like the continuation of the weekly downtrend where we break above just consolidation, and then now we potentially continue with the weekly downtrend. What I want to see is bulls negate that weekly downtrend and try to flip it around, but there's zero signs of that at the moment. Absolute zero right now. I should show you that hourly bear flag right now. Yeah, if QQQ doesn't bounce and there's no good news from Teslas and or anything, then it's going to be a battle in this zone for sure down here. But if it does break, then we're back looking at this Friday's high where it was acting as resistance here. See resistance. Sorry, support. Used to act as support. Now it's acting as resistance now. This pullback was a lot bigger than I expected. Bulls were hoping for a daily uptrend continuation and pull back a little bit and then retest it. This pullback, we literally just went straight back into the lower range of that sideways 3 days, 4 days sideways consolidation just broke above it, straight shot back into that lower range, which is bad luck for the bulls. Yeah, we'll see if the bulls can actually show up next week for Tesla and see if we get any relative strength. If you want to check the relative strength or relative weakness for Tesla right now, we do the ratio Tesla divided by QQQ. And you can see this relative weakness just on that Friday, that red candle for the past bit here. So that's all I got for you guys on Tesla. And let's go to Google. Google had a really nice bullish breakout due to its AI event on Wednesday, and we had a continuation of it over. And right now, it's trading back to its resistance zone, which is this cluster of volume that has been traded. So the most likely scenario is potentially, we chop around in that zone again, and we are now trading in the upper zone of that sell zone resistance area. So you can see, I would do a quick volume profile here for you guys. Let's see, let's just take it to here. So the reason for when we look at these sideways range where it chops around is that the amount of volume traded in there. So there's a lot of people that is holding this stock in that range due to the amount of sell and buy volume in that area. And that is why these kind of resistance zones matter a lot more than if, let's just say, this thing shot straight up. Where would it be a good example? Let's see. If a stock just shot straight up, it's very easy for it to just come back down because there is just no consolidation zones or anything while it's going up where it can act as strong support or resistance. But if you have something like a structure like this, where there's just a lot of sideways range in there, then you can act as a strong resistance or support, whether you're under or above it. And due to the amount of volume and people that would likely want to buy back or sell into it if we get to that into that price again. So that's essentially the psychology of it. So right now we're looking at this volume profile. This is the POC. This is a value area high, value area low, and you don't need to really know what those are, but they act as resistance and supports, whether you're under or above it. So right now we are testing the value area high, which is pretty much what we've been testing for the last 2 days for Google. And so far there's no red flags, even though we didn't get above it. I mean, we did shot straight up for quite many percent. So for the bulls to take a break under it and not like roll over, it's a good sign for the bulls. But anything can change in 2 days. Let's say tomorrow, we have a red candle, and next day we had a red candle, then that would be gone. What I talked about today. But as of now, it's looking pretty darn good for the bulls due to the amount of pullbacks we had is almost none at the moment. And we had a red day on QQQ on Friday, but Google was up 0.81%. Google was pretty much the only big tech stock that was relatively stronger versus all the other ones on Friday. So that's still a good sign for the bulls. And so we got to see if Apple, Microsoft, and everyone else decide when they start to roll over and QQQ drops, do Google start to join them? Or is he going to hold up good enough where it just kind of goes sideways a little bit? And once QQQ starts to bounce again after its consolidation, then Google can have a next move up to test this area. So we'll see about that. So bears definitely want to see it continue to reject from this area, this top of this value area high, and the bulls definitely the bulls would want to see us chop within this range and not break below this Thursday's low into the gap fill. And then if we don't do that, then the bulls are imperfectly comfortable. And once they consolidate sideways long enough, then there's a good chance we can go up more. We'll see if this. What I'm seeing is that we're very likely going to come back down to test this POC and or into this gap fill as well. If we do test this POC and break it, we're definitely 100% gap filling, and it may potentially trade just like this structure back here, where we can chop around before it decides to where it wants to go. That's the most likely scenario that I'm seeing. And we'll have to see the next price action for next week. I'll update you guys next weekend as well on Sunday once we get more price actions as well. Let's go to Microsoft. So Microsoft pretty much acts a little bit similar to like that Google. So you know how Google gapped up like this, and then just went, and now it's waiting for it sideways. So if you know how I was talking about, if Google can just go a little bit sideways, they potentially get the next leg up, which is exactly what Microsoft did. It had a nice move up, and all it did was just straight sideways, and then had another move up. The thing is, after this move up, you can see the bulls are getting very tired, and just from right here. Usually, when we make a new high, we want to see more follow through right after that. But you can see we made a new high, and then and bulls just kind of squeeze some shorts out up here, and then there's not enough buying left, and we just kind of fade. Same thing right here, new highs, and then just fade. So every time we make a new high, it kind of just fades. That's just the psychology of bulls getting a bit tired about buying. Every time we make a new high, it just squeeze some shorts out, and then there's just no more buyers left kind of feel to it. So we are getting into the sell zone for Microsoft as well. This range is back here. So we will see, do we get new buyers that decides they want to buy Microsoft here, or it becomes a distribution zone where sellers are trying to get rid of their positions here, and then we head back down to this prior level. Of course, it's going to depend on QQQ as well. And Microsoft, that's if we do get over this level, then I am looking back up into this all-time high structure. You see this structure here. So yeah, there's not much resistance actually above here. If we do get over that, if we go, then I'm looking at this level right here, the low of this structure, this zone. If we can break above this sell zone right here for the bulls. The bears, there's definitely a lot of room below us. If we do break, first thing I want to see is, can we even break prior day's low? As of now, daily uptrend is still continuing perfectly. So right now we want to see a break below prior day's low. And then now we can start our daily consolidations, and then the bounce of that daily consolidation will be very, very telling for us to see if the bulls are able to continue it, or we are going to form a daily downtrend. So that balance is going to be the most important thing. After we have one decent pullback, that bounce would tell us, should we get rid of our positions or keep it. If it's a shallow bounce, then we are likely going to get a daily downtrend confirmed. So from there, and let's take a look at Amazon. Amazon is looking pretty good back. Sorry, that's not what I was on. Click. Amazon was looking really good on Thursday, but delete this. But it was relatively weak on Friday. That's usually how Amazon trades. Sometimes it's just relatively stronger for some reason, because due to the amount of bounces compared to other, it's bounced a lot less than every other tech stock. So sometimes it's just doing a little bit of a catch up when the market is very bullish, and on red days it just gives it all back a lot more than other tech stocks. And that's essentially what happened on Friday. And we did break above this teal looking wedge, and right now it's back testing it and bounce off of it, which is a very good sign for the bulls. It's exactly what you want to see when it breaks a strong resistance. We break above it. When you break above it here, you want to see follow through from the bulls, which had happened on Thursday. So there's a follow through, and now we are back testing it, and bounces off of it slightly. You can see we had a little bit of a lower wick. So if we do get a green day, then that's a very good sign for the bulls, because what every trader usually does, breaks above resistance, wants to follow through, And when it back tests it, we want to see a bounce after the back test, and you can just set a stop loss right below the prior support. And so you're only risking a little bit, because if we do break that support, let's say we bounce and then rolls back into it, you just lose a small amount. But if we do bounce and break that prior pivot high, then we have a continuation of the daily uptrend, and you can taste nice profit here. So that's what bulls would like to see in this break above, bull follow through, back tests, and do we bounce off of here on Monday or not is going to be key for the bulls. If we do and if we do break above this prior high, which is Thursday's high, is at 113.28, then it's going to be a continuation of the. Actually, that will be our first daily uptrend formed due to um, this size of this pullback made Amazon from a daily uptrend into a neutral trend. So now, if we do confirm that again, then it'll be a continuation of its daily uptrend. So that'll be good for the bulls. Next level I'll be looking at is back to this cluster of zone. If we do break above, obviously this guy's gonna come in first, and then back to this zone. So we'll see if the bulls can actually break above. Finally, it's February's high, which every other tech stock is above this price except Amazon. So we have to see if Amazon actually catches up or not, or ends up continue to be on team a little bit more bearish than the other big tech stocks. All right, let's get to Apple, the biggest guy in the market with Microsoft. It's pretty much same weighting. Let me delete this. So what I was talking about last week on after earnings for Apple is that I did not like the price action of what happened after earnings. And if we zoom into the closer time frames and go to the 5 minutes, you can see we have been going completely sideways after earnings. And it's not a good sign due to the psychology of it. So remember back here, this was the after hours gap up for the earnings. And I was saying if we do break over 170, we're going to have the next leg up. But the problem is that our next leg up happened only within the first 10 minutes of the market opened. And that was it. And there's just no more gains to be made for the bulls. So if you bought it anywhere after that move for the past whole week, you pretty much either broke even or you're down a little bit, because it just went completely sideways. And now we are still below it. Even though we're still above that 170 range, we are starting to fade a little bit. We're still within that range. So there's no red flags for the bulls yet. But I just don't like how the psychology of it, where it's just a gap up. Anybody that got in after is making zero money unless you got in before it. So, and now we are pulling back into the low of that range. You can see all of this. We broke below prior high and prior lows. Sorry, below the prior lows. So daily consolidation is on its way already. And do we see a continuation where it would just say, continuation of the daily uptrend? A nice move up, pull back, continuation of the daily uptrend, nice move up, pulls back. Now we're in consolidation again. It's just going to be another nice. It's just going to be another consolidation, shallow consolidation, and then we have a next move up. We don't know any of that yet. We had a decent bounce at the end of the day on Friday, so it's looking that wick is looking decent. But we'll have to see if next week do we start to see more weakness in the tech sector, and or this was just a shallow short consolidation for most of the tech stocks, and they're looking for them to make their next leg up or not. Just like all its peers at the moment are consolidating. So the size of the consolidation is the most important for me. If we consolidate under this 171 and 170 range, then the next bounce up I'm going to be looking for a daily lower high. So this high is going to be lower than the prior high, and that would give us a form a daily downtrend if we do break the prior pivot low. So the size of the pullback is going to be key for me. So if we do get just a shallow pullback, let's say Monday is a slight red day, and we just kind of goes back here and it closes here, that's still okay for the bulls. And then we can just bounce off of here, and then we go back up. That's just a shallow pullback, and that is not a red flag at all. If we do get a big pullback, then we're going to start looking for a potential that a daily downtrend can form due to the size of this first pullback. So that's what I will be watching for Apple. And if we do break above this high, I'm looking back up here, 176, 175, which is the top of this range right here. And you can see as well all this areas where we have pretty close to all-time highs now. So that's the zone I'll be looking at if we do break above this current cluster zone, and we will likely be looking at this zone. If we do break below, I am looking at us actually testing this 170, 170 first. If we break that, then I'm looking back down here to 167.5 area. So that is all I got for you guys on all 6 of the big tech stocks where I do every Sunday. So, I'll do that. I started doing 6 big tech stocks, these 6 every Sunday, and the natural gas weekly video on Saturday. And I'll do the daily market update video where I break down QQQ and SPY every day. And I might throw in like a tech stock here and there during those daily market breakdowns due to sometimes there's just something happening on those stocks, like a big gap down or big gap up news as well, and in the market in those stocks. So I will see you guys tomorrow, and hopefully you guys have a great rest of you guys' weekends. Futures market open in 3 hours, and what I'm looking into next week is potentially we get a little bit of a slight pullback on QQQ due to we are testing that upper range of that rising wedge. That's where we got the pullback on Friday, but we can just chop in range until the end of the week, but who knows? SPY's just been chopping sideways, so we'll see. If a QQQ does roll over, SPY is definitely not holding up unless the energy sector and the financial sector decides to hold up, because they are the most weakest at the moment, which is dragging down the SPY. And the only thing that's holding up SPY is the tech sector right now. So, and we'll see who joins who. Is Tech Bulls going to join Team Bear with SPY, or Team Bears on the XLF and XLE energy sector is going to join Team Bull with QQQ? And we'll know very soon, actually. A lot of patterns are going to break soon, just like the NVIDIA rising wedge. QQQ has a rising wedge. And it'll be an interesting week this week for sure. And I will see you guys tomorrow on the Daily Update Show. And have a great rest of you guys' weekend.